As a long-term investor, you're kind of just waiting for this, but there's a lot of, oh my God, it's going down, it's going up. And their time horizon is much shorter. And it fucks with your head. So it's a real skill set to learn. It kind of hurts you when you're hearing, oh my God, it's going down, it's going up, it's going down, it's going to do, and you're forgetting what game you're playing, which is like, I bought it somewhere when it was low in crypto winter or crypto spring, and I'm going to sell out late crypto autumn, and it'll have gone up 10x, 20x, 30x from then. And that's all I'm doing. I don't actually have to do anything. I was talking to a friend of mine about this. It's like, crypto is so incredible that it's been giving us the same opportunity every 4 years. And it's like, it's so stupid that it's been so easy. You just buy that big sell-off or add to your positions in the sell-off and do nothing.
In light of recent market shifts and rising uncertainties in the global economy, it's easy to overlook the transformative potential that the cryptocurrency and digital asset market holds. For the first time in history, investors from every corner of the globe, from seasoned traders in developed markets to everyday investors in emerging economies, have access to an open, 24/7 financial environment with opportunities to grow wealth like never before. But, according to Raoul Pal, founder of Real Vision, crypto is more than just access. It's the chance to build resilience against the relentless debasement of fiat currencies by central banks. According to Raoul Pal, cryptocurrencies are a lifeline in a system that he believes is unsustainable, not just an alternative asset class. Traditional savings lose value more quickly every year as central banks keep creating more money. This rate of devaluation is too fast for stocks and bonds to keep up with. Nonetheless, cryptocurrencies have outperformed central bank balance sheets worldwide over the last 15 years, in addition to maintaining their value. This is a once-in-a-lifetime chance to protect oneself against the shortcomings of an outdated financial system. In today's video, we'll dive into Raoul Pal's latest analysis, where he explains why he believes the biggest moves in this crypto bull market are just beginning.
Presidential election years, nobody really cares who gets elected because the market goes up. Now, I think a Trump victory probably may extend the cycle in terms of magnitude, but the amplitude is probably the same. It just goes up. And it's from this period, end of October, really. That period now is like the correction we're having today. Think about that. And then the rest looks kind of like something down there. You know what I'm talking about. Pick up a boring chart. Business cycle. Those of you who are not crypto people here, the business cycle. Interest rate market, how it's moved, is indicating the ISM, the business cycle for manufacturing, is about to rise. That will paper over a lot of sins. It will allow a lot of cyclical stocks, commodity plays, all of this to really start working. We're starting to see commodities starting to work. Really, the ISM is yet to turn higher. The next 12 months will be nothing more than the business cycle going up. The business cycle going up will drive all of your favorite stocks and make you all look like investing geniuses. We are generally all morons. And if the business cycle can make us look like geniuses, we'll take any victory we've got. So I'll take that. It means basically you throw a dart into the stock market and everything goes up when you buy it. So we're at that point. It starts with the growth cycle, the macro summer and macro spring is really all about the growth stocks and the crypto. And then it starts as the macro summer. This is not the summer season. This is the third year of the everything code cycle. That's when the cyclical stocks start performing as the ISM has come up. ISM has been really sticky on the lows, right? Look at this pattern we've not seen really. Even then, the 2000s wasn't quite the same. So it's been sluggish, and it's one of the reasons I think the Fed will continue to cut rates, and we're not seeing an inflationary environment. And we'll talk a bit about bonds and stuff in a bit. That's that chart. Flipping through, general business conditions in the future are going up. New orders expectations going. ISM, that turn in the ISM matters, because guess what? When the business cycle goes up, we've all got a bit more money because our businesses are doing better. We might get a pay rise, all of this. And your mortgages are tending to fall. So we're spending less money on our mortgages or our car service payments or whatever it may be. And guess what? Altcoins go up as a percentage of market cap in relation to the business cycle. Everything is the business cycle. This is what I've been trying to tell you. Crypto is macro. Everything's fucking macro. It's all the same thing. You could change altcoins and turn it into small caps in equities, or you can turn it into credit. You can do whatever you want. They're all the same thing. It's all risk. It's all allocation of our liquidity, our capital into markets based on how we feel, which is the business cycle. So as the business cycle turns up, alt season. That's that inverse head and shoulders I talked about of the of alt season. This is previous bull markets. Obviously, the first bull market we can discount. Second one, 11 to 13, that was wild. I was involved in that one. That's when I first started investing. Bitcoin was, I can't remember, bought it at 200, got to 2000, was kind of like blown away. These are the percentage returns. And then, the returns have come down a bit over time, as we can see, as adoption curves. We're right here, right? Kids, it's nothing to worry about. There's nothing to worry about, literally. So if we can stop the drama, I'd appreciate it.
Raoul Pal is certain that cryptocurrencies will see a strong bull market in 2025 and beyond. He thinks that in order to avoid a major economic downturn that may jeopardize the stability of the entire system and potentially jeopardize trillions of dollars, central banks would need to increase money creation at this important point in the economic cycle. Raoul claims that the central banks have been using this tactic since 2008 and that they will likely stick to their everything code script in order to save the financial system. Raoul highlights that only cryptocurrencies and a few tech stocks have proven robust due to central banks' persistent currency devaluation, continuously surpassing both inflation and currency devaluation. Raoul advises viewers to calm down, stay away from the demand, and follow to a straightforward, tried-and-true plan: buy low, sell high. Importantly, Pal cautions against seeing this market as a get-rich-quick scheme and suggests against taking risks like investing heavily in obscure, unproven tokens or meme coins. That's the quickest way to lose out on this opportunity's true, long-term potential. Now let's get back to the interview and hear what he has to say.
As a long-term investor, you're kind of just waiting for this, but there's a lot of, oh my God, it's going down, it's going up. And their time horizon is much shorter. And it f***s with your head. So it's a real skill set to learn. It kind of hurts you when you're hearing, oh my God, it's going down, it's going up, it's going down, it's going to do. And you're forgetting what game you're playing, which is like, I bought it somewhere when it was low in crypto winter or crypto spring. And I'm going to sell out late crypto autumn, and it'll have gone up 10x, 20x, 30x from then. And that's all I'm doing. I don't actually have to do anything. I was talking to a friend of mine about this. It's like, crypto is so incredible that it's been giving us the same opportunity every 4 years. And it's like, it's so stupid that it's been so easy. You just buy that big sell-off or add to your positions in the sell-off and do nothing. And everybody who'd done that would have made better returns than starting a startup. If you'd have raised $1 million for a startup, if you'd have just put it in the market instead, using that cycle, you'd have done better. I mean, pretty much everything we do, everything else is actually dilutive. And I know people are like, oh, Raoul, he's become such a crypto guy. He used to be the macro guy. He used to talk about oil and dollar yen. I'm like, I don't give a f about that stuff because it doesn't produce 150% returns a year. I'm actually trying to my future and your future. That's what matters to me. And part of that is I really would like everybody to realize that if the yellow fruit comes, which as you can see, I've shown the charts, is it before the election, after the election? How does it end this month? I don't know, but it's there. I mean, it's there already. Don't f this thing up. And then, I've already seen there's people at Real Vision this thing up, colleagues, because what happens is you get taken over by the madness. Ansem, this guy, Murad, they're making 100x. If I made 100x, I could be them. I could be wealthy. And before you know it, that nice bucket of Solana, Ethereum, well, Ethereum's been a dog, but I still own Ethereum via NFTs. Solana, Ethereum, Bitcoin, and maybe you've diversified to Bracia, Sui, or Near, or whatever it may be. And then what happens is over time, you creep all that into meme coins. And then you're desperately in the search for the next big one. It's that kind of cocaine hit that you're searching for your next high, the next 50x. Oh my God, I got that one early and that one. And then you're buying into this AI narrative. Oh my God, AI has started a meme revolution and everything in the world's changed. I need to buy this. Before you know it, you're going to get washed out and washed out and washed out.
Long-term cryptocurrency investors are reminded by Raoul Pal's message to keep a level head despite the market's euphoria and short-term volatility. He admits that price fluctuations and the thrill of large victories that others may be sharing can be quite demoralizing and distracting. He does stress, though, that a longer time perspective is where the real value in cryptocurrency investing lies. According to Pal, the best profits are obtained by merely purchasing at market lows such as during crypto winter and then selling much later, during crypto autumn. He points out that investors can potentially earn enormous profits by using this method, possibly 10x, 20x, or even 30x their initial investments. He contrasts this cyclical potential with launching a conventional company, noting out that when done methodically, cryptocurrency investments have produced higher returns than many high-risk endeavors, including as startups. However, Pal warns against the cocaine hit attitude that frequently emerges, in which investors forsake reliable, high-potential assets like Ethereum, Bitcoin, or Solana in favor of the newest speculative token, meme coin, or artificial intelligence project in the hopes of a 100x return. He cautions that following these high-risk, high-volatility strategies can result in losses and washouts when investors become caught up in a vicious cycle of exaggeration and remorse. Pal believes in taking the long view. He wants his audience to avoid becoming distracted by the quick profits made by others, and instead remain committed to creating their own destiny. His advice is to maintain discipline, keep to your core assets, and avoid getting sidetracked by the market's madness from what may be a genuinely transformative wealth-building opportunity. Until next time, happy investing.